Hello friends, this is Raj Sastry from Raj Option Trading. Today is May 30, 2021. I want to talk about beaten down stocks with great fundamentals, and these are really poised to come back. So with that, I got a couple images here. First one is chemocentric, and they're really into cancer and helping patients with the cancer disease. And then we got CBAT energy, they're into electric energy and they can power the autonomous vehicles. And then we got Unity Software, they have a platform for the video games. It's a great company. So with that, let's take a look at the stocks and go from there. So here is the list of stocks. This is page 1 of 4. So first on the list, before I go into the details, the way this chart is organized is I got companies here, the ticker symbol, the company, the price, and the market cap. I also have average 3-month volume in millions. And then I have institutions, how much is owned by institutions. It's a great to understand, institutions are holding companies. And then I have sales and sales growth. It's very important to have good sales growth. And then margin itself, what the gross margin, what the net margin, as you can see here, and what the short ratio. Sometimes you have to pay close attention to short ratio. It can help you invest with the timing. And then we got ROE. You got to understand if the company is profitable. ROE will tell you whether the company is profitable or not. And then we also have cash and free cash flow. It's good to have good amount of cash and good cash flow. This is really free cash flow. And then debt to equity ratio, it will tell you if the company is taking on too much debt related to its equity. So anytime you see debt to equity ratio greater than 0.5 or even 0.3, you got to little bit take attention here. Some companies with the debt to equity ratio more than 1, clearly it's a warning signal. And we got some companies, as you can see here, with more debt to equity ratio. Then we got price to sales ratio. This is really valuation ratio. Anytime you got high price to sales ratio, you got to watch out because valuation is too high. For example, Workhors here has got 100 plus price to sales ratio, and same with the story with Solo. So you got to be a little bit careful in those scenarios. Then I have performance here, the 6-month performance. I sorted this chart by 6-month performance. The one at the top has done worst in 6 months, and from there it's in the ascending order. And then we got 1-year performance and 5-year performance. It will give an idea to you how are this company doing in a longer horizon. And then we have 20-day moving average, how much it's up or down from 20-day moving average, and also how much it's up or down from 50-day moving average. And then last but not least, we got how much it's off from 52-week high. So it will give you an idea, is it near 52-week high or it's off? Because this list has all the stocks which are down for 6 months. Obviously 52-week difference with 52-week high will be pretty much negative all along. So with that, let's look at first one here, chemocentric. It's into cancer and a biotechnology company. $10 stock. They've fallen off drastically from 52-week high because of the FDA approval related issues. And I think companies, institutions still own good amount of stock, and they have a good average 3-month volume. That's great. 2.3 million shares traded. That's always good. And then we got sales. Sales from a 1-year perspective, there's a sales growth. Quarter over quarter also there's a sales growth. So with sales growth, it's a good one to look at. And also gross margin is 0 right now, so I'm not too happy about it. But I think with a good sales growth, it's probably we can look past the gross margin at this point. Net margin is negative. Companies not making money at the end of the day. And as you can see here, they got good amount of cash. Free cash flow is negative at this point. Equity, debt to equity is okay, not too bad. And the stock is really oversold at this point. RSI is 20. And I think it's good to really buy some $10 stock and own it for a long time. This will really bounce back as you go forward. Next, we got a couple more things. I will not talk about everything. For example, Adverum. I will not talk through this too much because, as you can see here, there is some price. There is some sales growth here. I don't see gross margin, and also as we scan through this, debt to equity ratio is not too bad. But overall, I feel like its gross margin is negative, and it's a low dollar stock. Probably it's into short squeeze type scenario. People manipulate the low dollar stocks, but you can take a look at this and see if it's worth investing. At this time, they seems to be doing pretty okay. I've not looked at this in detail. Then we got GOTU here, GSX Tech Do. I think they changed the name, ticker symbol to GOTU. The problem with all the Chinese online education stocks is China is really cracking down on these stocks to really see if they're doing well or are they cheating the consumers. So with that, GoTo also came down drastically. There are various lawsuits on this company because stock prices drastically come down, and there is some allegation that this company may be manipulating the data. So with that, their earnings announcement is done, and as you can see here, they got some sales growth year over year, quarter over quarter, and nice gross margin. And they're off so badly, 88% from 1 year high. And as you can see here, they don't have too much debt, which is great. They have a lot of cash. Free cash flow is zero at this time. So with that, I feel like it may be okay to buy a little bit of GoTo here. Don't buy too much, but it's okay to buy a little bit in this down market here and hold it for a while. Then we got a couple more here. ATNX, $4 stock. I think they got good sales growth, as you can see here, 1 year growth, and they got nice gross margin, 33%, and they're off 69% from 52-week high. I think they're barely above 20-day moving average. They're also above 50-day moving average. So stock is really taking turn on the positive side. Then you got Workhors here. I think it's a $9 stock. Very low, sales at this time, $2 million. That's why the sales growth is really looks great because it's off of a $2 million basis. Gross margin is negative, something that I don't like too much. But all these EV stocks, they're a little bit, they don't have too much gross margin at this time. They have some short ratio and they're not making money. Net margin is negative, and they've got a high valuation from a price to sales perspective, and they also have a good amount of debt. I like to see this below 0.5 if possible. It's not terribly bad, but I think it's a little bit higher. So with that, they've done nicely for 1 year, they've done nicely for 5 year. As you can see, they are just about 20-day moving average, which is good. So I feel like this stock may be okay to buy a little bit. Stock might turn on the positive side slowly. It just crossed its 20-day moving average. Then we got Array Ride, which is the Lordstow Motors, BDTX Black Diamond. I think many of these have beaten down so drastically. And as you scan through this, I think Array has got 19% gross margin. This stock has been beaten down, but now it's showing some progress. As you can see here, it's down 70% from 1 year high, and they're down 34% from 50 to 50-day moving average, and also 13% down from 20-day moving average. So I think this has a short squeeze, as you can see. I mean, they got a huge short ratio here. It may be okay to buy some array at this point and hold for a long time. And I see they got positive ROE, which is again good. I love to see positive ROE. They got a good amount of cash, and they also have good free cash flow. RSI is 34. It's good to enter and buy some at this time. And Lordstow, I think they don't have any sales at this time. Same is the story with the Black Diamond. I think some of these, even though there is no sales, it's okay to buy some, especially because it's got a lot of short interest. Also, it's okay to buy some and hold for a long time. As an example, Lordstow there 51 RSI, and Black Diamond it's just 24 RSI. So Black Diamond could be in a better shape from an entry perspective, and the Lordstow is not too bad. I think many of these EV stocks have gone up of late. Then you got Fold and Acadia Pharmaceuticals. I like both of these stocks. They've done nicely from a 1 year and quarter-over-quarter sales perspective. Nice gross margin. I love this gross margin. And as you see here, they've not done great. They got a lot of cash, not too bad. For example, Fold, they got a little bit higher debt load, but whereas Acadia Pharmaceutical, not too much debt load here. And I think they're doing well. I think they're down 1% from 20-day moving average in case of Fold. And in case of Acadia, I think they're turning around. They're up 5% from 20-day moving average and up 2% from 50-day moving average. So it may be okay to buy some of this Acadia. It's trying to go up at this time. And also Fold is also okay. You can buy a little bit. And I think it's showing some progress, as you can see here, and hold for a while. Hyliion is a $10 stock. As you scan through this, they're also up nicely above 20-day moving average, above 50-day moving average. They're showing some signs of progress here. Even though there is no sales at this time, it may be okay to buy a little bit. Then we got Intercep Pharmaceuticals. It's got nice sales growth, as you can see here. Very good gross margin and high short ratio here. And as we scan through this here, they got good amount of cash. Free cash flow is negative, and debt to equity ratio is very, very, very high. Looks like these guys have taken a lot of loan. I don't like this. It's too high from a it's the RSI. So debt to equity ratio is 0. So I think that's a good story. I think it's good. RSI is 40, not too bad. I think it's a good time to enter. And they're 5% down from 20-day moving average, and 18% down from 50-day moving average. I think Intercept is a good company. It's so cheap at this point. I would buy some and hold for a while. As we scan through this, we got a couple more here. Solo, Appian, good sales growth here. I also like, with the Solo here, it's a high valuation, something to watch out for. Stock is down 72%. This company has done great, I think, last year. Appian also a great company. They have a no code type, workflow management type software, business process management. I think it's a great company. They will do well. They have a, I think, high short ratio here. I've seen this company squeezing out all the shorts many times. As you scan through this, I also love companies like AMWL, NNOX. It's again a great company. And even I like stocks like XPEV, China EV Play, and also PRVB is also not too bad. Then we got JKS and CBAT here with the positive sales growth here. And as you scan through this, they also have a gross margin, which is not great, but it's okay. As you scan through this here, both are doing well they're above their 20-day moving average, just below their 60-day moving average. It may be okay to buy some of this also. Next, we got a couple more here. I love stocks like Sarepta. Sarepta, as an example, is down so drastically, 58% from 52-week high. They got positive sales growth here, high short ratio. Debt to equity is a little high, so you got to be a little careful here. Company has got a lot of loan on their balance sheet, but I think this will do well. $75 stock. They're just trying to go above their 20-day moving average at this time. They're also above 50-day moving average. It's good to buy Sarepta. TAL Education is again an online education play. China is cracking down on the online education. I think this may be okay to buy. They don't have all the baggage like GOTU or GSX Tech do. $39 stock, positive sales growth as you can see here, nice gross margin, and company is down 56% from 52-week high. I think it may be okay to buy some. Then you got NVT. NVT is one of my favorite stocks. It normally does well up and down many times. $28 stock has done nicely for 1 year, 53% off of 52-week high. And as you scan through this, they also don't have too much debt, which is always good. And from a gross margin perspective, they got, let's see here, a 27% gross margin, which is not bad. High short ratio, they could squeeze these shorts out. As you scan through this, there are some great stocks here. Lee as an example. Splunk used to be a great stock a while ago, but now they're down, as you can see here. I also like Valadyne. It's $9 stock. It's got a high short ratio, as you can see here. I love this company. They're into autonomous vehicle, mainly forklifts and robots. I think it's a good company. Then also we got JFrog here and TechDo. I think both are great stocks. EDU. They got positive sales growth. But eBond here, it's into Bitcoin machines. I think company has its company has gone down drastically. I don't know whether to buy this company or not. It may be okay to buy some, but with China cracking down on the Bitcoin, I'm not too sure how much upside there will be. But as a contrarian, it's okay to buy some and hold for a while. Then we got Inovio, Metromile. I love Metromile also. It's a great company. Insurance, they provide auto insurance by miles driven. $8 stock. They've gone down drastically. I think they're trying to show some signs here. As you can see here, they're above their 20-day moving average now. Probably they will take on their 50-day moving average soon. Inovio also, it's a great one. I think they also, as you can see here, they crossed their 20-day moving average. They might do well. They might even cross their 50-day as you go forward. I love Unity Software. It's a great company. This company has drastically came down 46% off of 52-week high. They're just above their 20-day moving average, which is good. Then we got Fisker. Fisker is a good company, but I think off late, it's done nicely. As you can see here, it's 13% above 20-day moving average. I think it's okay to buy some Fisker in the downturn. We got IQ, Sonova. As you can see here, they have positive sales growth, which is good. And on the negative side, they got a little bit higher debt, higher debt on their balance sheet. I don't like this situation too much, but given they are down drastically, it may be okay. These companies can do well, especially in the solar area. I think it's companies do take a good amount of debt. Then we got ChargePoint here. ChargePoint is a great company with the Biden's infra bill. This can get some boost, I would think. And they've done nicely. They crossed their 20-day moving average, as you can see here, and they also crossed their 50-day moving average. It may be okay to buy some of this company. Right now, there is no sales, as you can see here, and there is also no sales growth as usual. 15% short ratio. I think this company can squeeze the shorts out. Then we got Sunrun here. Sunrun, I think it's a good company. As you can see here, they also crossed their 20-day moving average. Positive sales growth. I think it's good to buy some stock here. Got Smile Direct. This used to be a great stock. I thought this will give the run for money for Align Technologies, but that did not turn out well. Align has done so well, and Smile Direct is still struggling. And as you can see, a high short ratio. I don't like their debt load here, 3.5. It's the highest in this page. So that's why I think they got too much debt load here. But it may be okay to buy as a contrarian a little bit. Don't buy too much and hold it for a while. Then we got a couple more here. I will not go through everything. As you can see here, the way to go through is really look at the companies, look at the ones with the positive sales growth, and look at things like gross margin, great gross margin here for big commerce, and look at the short ratio also. look at the cash and also RSIs to see if it's a good to enter at this point. Anything above 55, just watch out a little bit. But if it is below 55, it may be okay to buy a little bit. And this also crossed the 20-day moving average. Just trying to cross 50-day moving average, maybe okay to buy some. Limelight, this has been dud for a long time. I would not buy too much. It's done nicely for 5 years, but 1 year is bad. I think this company is really struggling because companies like Akamai, Falsely, even Cloudflare, they're all eating their lunch. As you look through here, I love QuantumScape also. I think $25 stock. I think they will do well with the they're still working on the their technology for batteries, but I think it's a good stock to buy long term. Right now sales is zero. Then you got a couple players here: Zoom, New Age, Huya, OneConnect, Neo, and Fu. All have got positive sales growth, as you can see here, 1 year and quarter over quarter. They also have got nice gross margin. And as you see here, they don't have too much debt, which is not bad. And they're also off nicely from 52-week high, especially here Neo. It really crossed their 20-day moving average and also crossed 50-day moving average. It may be okay to buy some Neo. And also Fu, Arkimoto, it also crossed its 20-day moving average. So it kind of shows they are kind of making some progress here. Even Huya, it's just barely down from 50 to 20-day moving average. I think it's going to cross that also. Then we got a couple more here. I love Snowflake also. It does not have sales growth, that's why it's not highlighted, but it's got a nice gross margin, and it's 45% off from 52-week high. I'm a buyer of Snowflake. In this environment, I'll buy some and hold it for a long time. Then we got a couple more here: Medallia, EBS, DHC, QTT. All of them have got positive sales growth, as you can see here. And DHC has got high debt on their balance sheet, so I would be a little bit careful here. But otherwise, I think they're doing nicely. At least Emergent Bio, I think they got a little bit bad rapport with their J&J drug and the conditions, and I think they have to discard some of the J&J vaccine. But now they're recovering, as you can see here. They just crossed their 20-day moving average. It's a good sign. I would buy some Emergent Bio at this time and hold for a long time. Same is the story with QTT. They're also turning above 20-day moving average. It's okay to buy some and hold for a long time. Then we got VNet, Anaplan, and Yext. As you can see here, VNet has got a little bit higher debt to equity ratio, but positive sales growth and nice gross margin. I love Anaplan. I would buy some Anaplan at this time and hold for a long time. Then you got the Yext here. Yext positive sales growth, as you can see here. But I think it's as you can see here, a little bit higher debt load, maybe okay. But I think they also did nicely in 20-day, 13% above 20-day moving average and 5% above 50-day moving average. Teladoc is again great story. Cathy Wood bought ton of Teladoc. I think right now they're above their 20-day moving average, showing some signs of bouncing back. I would buy some Teladoc and hold it for a while. SFT Shift, I think this is $7 stock. As you can see here, not too much gross margin. It may be okay to buy a little bit, as a contrarian and see how it does. This is probably the last page here in this chart here. Alibaba, Kala, Jumia, Cyros, all have got positive sales growth, as you can see here. Probably with the exception of Jumia here. It's a great stock, has fallen down drastically. That's why I highlighted this here. But as you can see here, I think they got pretty much okay debt to equity ratio, not too bad. Nice gross margin, as you can see here. And as you can see here, Kala is about 20-day moving average. So is Jumia and even Cyros for that matter. I would buy some at this point, hold for a while. Kala has got high, very low net margin, as you can see here, high short ratio, so it might get squeezed out. Then we got a couple more here for solar, um, KE Holdings, China-based real estate company, Corsair, BKI. BKI is one of my favorites. It's into accounting software. It's, people don't pay too much attention to back office accounting software, but the company has done very nicely. I think I would love this company. Corsair is also into gaming. It's a good company. Stock has been fallen down pretty drastically. As a contrarian, you could buy some and hold. KE Holdings is a great company, as you can see here. They are just crossed the 20-day moving average. It may be okay to buy some. And also First Solar is also a great stock. I've seen this stock going up and down so drastically. And as you can see here, they are doing nicely. They crossed their 20-day moving average here. I think it's okay to buy some. Next we got a couple more here: JD, GDS, Palantir, Vistra. I love Palantir, $22 stock. Has great leadership at the top. JD is also good. I think they shot up so drastically off late, but still down 32% from 52-week high. They just crossed their 20-day moving average. I would buy some. Palantir, I think even Kathy Wood has got some Palantir stock. As you see here, Joy, Farfetch, it's into luxury apparel type business online. Pindiadia, YPF. I think these are all great stocks. Watch out for a little bit high debt on YPF. Got to be a little bit careful there. But otherwise, some of these have got high short ratio. They can get really good opportunity as shorts get squeezed out. So with that, let's jump into few charts. I will not belabor too much, just to give you some idea here. First, we got CCXI ChemoCen. Stock has gapped down so drastically, as you can see here, after the FDA issues, and stock is really flatlining here. So I would not buy call option here. IV percentile is a little high, but you could buy the stock outright. As you can see here right now, the RSI is trying to go slowly a little bit up. Right now they are down drastically, trying to cope up and go a little bit higher. It's a flat to little upper, going up a little bit. And implied wall is showing some, we don't need to worry too much about the implied wall, because I would not recommend buying the call option. But if you want to sell some put option, you could do that. You could sell, maybe stock is at $10, you could buy some $8 or so put options. You could do something along those lines. And DMI perspective, it's really negative. Look at the gap between the red line and the blue line. That's high. That tells you, right now bears are really controlling this situation here, and they're powering the stock flat to down. Volume average not doing much. I think it's really flat at this time, which is understandable. I'm sure this will do well as we go forward. Right now it's really flat. Smart money is trying to think through what way to go. Right now it's flat, trying to go up or maybe flat here. So overall, I feel like this is a contrarian play. I would buy some ChemoCen and hold for a long time. This stock, I've seen this stock going up so nicely in the past. As you can see, your high is $70 here. Now they're a $10 stock. So it's a very big haircut. Next, let's look at the GOTU. GOTU is one of the epicenter. It's in the epicenter. They got a lot of allegations and fraud charges on them. Overall, China is cracking down on this online educational place. They also had their earnings May 26th. As you can see here, at this time, it may be okay to buy some, on this downturn. As a contrarian, RSI is flat. And DMI shows, it's a really bearish market right now, with the blue line below red line. On the balance, volume is pretty flat, but smart money, as you can see here, it's flowing into the stock, which is again a good sign here. So I would buy some GOTU. I would not buy too much, but I would buy some GOTU, hold for a while. Next is Fold, Amicus Therapeutics. Same story here. It's a flatlining right now. Stock is flatlining, and I think RSI is trying to go up. That's a good sign. As the RSI is trying to go up slowly, stock will also tick up. And as you can see here, volume average is trying to also go up, and smart money is flowing into the stock. So I would buy some Fold at this time and hold for a while. Even if you are an option buyer, it's okay to buy call options, because IV is so low, 14%. Stock is at $9 stock. So because it's $9 stock, instead of buying call options, you'd buy stock outright. It's not too bad. Next, let's look at Anaplan. Anaplan has they did their earnings announcement. Stock kind of came down after that. At this time, I think it doesn't make sense to look at the chart too much. But as you can see here, RSI is trying to tick up. That's good. And also on the balance volume, as you can see, it's trying to slow a small tick up. And check-in money flow is also showing smart money is flowing into the stock. I would be a buyer of this stock at this time. They got a great leader, Frank Calderoni. Next, we'll wrap it up here. Thank you very much. Happy investing and trading. Please subscribe.